What's up, good people? It's Larry Jones here back at Stock Up, and I just want to let you guys know it's been a roller coaster ride, but I want to let you guys know it's going to be all right because we're going to continue to make money, all right, even in these volatile seasons. Actually, guys like me, we get excited about volatile seasons, not that we want them to come, but it causes us to use the tools that we have and really get to use the knowledge that we have in the markets, right? Everybody can make money in a bull market, but making money in a bear market is challenging, but it's a good challenge to have because it keeps us sharp. And you want to keep your eye on the market. Now, having said that, I want to just talk about not losing focus. I want to show you why you need more than a Robinhood and you need more than a Webull. Now, I would say still keep those apps, but you need more than just those apps. And so we're going to talk about that. Then I'm going to show you how Fidelity, a lot of you guys don't know that you could do fractional shares in Fidelity. Okay, so I'm going to just talk about, I got a few pointers written down here, why Robinhood and Webull and these other phone-based apps are not just enough. Number one, you can't buy OTC stock, right? You can't buy over-the-counter stock. And I don't believe that you could buy warrants of a stock. That's number two. Number three, with Fidelity, I can pick up the phone and call somebody and have somebody on the line in minutes without any hassle because they're used to this, years and years of this, all right? Number four, they have enough money to cover their bills. These brokerage houses have bills or floats or whatever you want to call it, debt, and they have enough money. That's why they didn't do what Robinhood did. Okay, so now I'm not speaking negative about Robinhood, though. What they did was wrong. Is absolutely wrong. There's no way around it. And then the CEO made it worse with his lame explanation. It was just wrong. So it's our time to make some of this money, and they just want to limit it to the hedge fund managers. Okay, enough on that. All right, so we're going to keep it. The way that you show them and get even with them is you get smarter than them, all right? You hit them in the pocket. And that's what these millennials is doing. And I'm marching with them because I agree with it. It's something that the baby boomers couldn't get done. My generation couldn't get done, but these there's going to be blood on the floor, and all of us going to have to take a little loss. It's battle. Everybody's going to have to take a little loss, but I believe in the long run it's going to be good. The one thing we don't want is overregulation because that's going to cost us. So you don't want the government over-regulating things because it's going to cost us. Though there needs to be some regulations in this manipulation by these hedge funds and these institutions. That's where the regulation need to be. So they need to leave the Robinhooders alone. They need to leave Reddit alone, and they need to go and check up on the hedge fund managers and Robinhood. That's who they need to look at. All right, I'm done with that. So let's not be distracted because there's money to be made elsewhere. I'm going to tell you what I've been doing. First thing I'm going to tell you right now what you need to be doing. So I made a video yesterday and I said then that, or 2 days ago, it was 2 days ago. I said that this volatility is probably going to go on to Tuesday. And don't get excited because the market comes back up like it did yesterday. This volatility is going to continue. I'm hoping by Tuesday or Wednesday. Weekends do things to kind of calm things down. So having said that, that's why when this all happened, I increased my Bitcoin positions and I'm up to date. So you got to know how to dodge and weave. You got to know when to hold them, when to fold them. Remember, this is a game of chess. So what I thought about is just like a lot of you guys thought, you know what? They don't trust our government anymore. They're going to start going over to cryptocurrency. And so I made some money. And for those of you that don't have a cryptocurrency app, you can, on Fidelity, buy cryptocurrency. I bought a couple of cryptocurrency mining companies. One is Mara, M-A-R-A. The other one is Riot, R-I-O-T. And the other one is E-T-H-E, E-T-H-E. All right, Ethereum, Grayscale. And I'm doing well in all three of them. Okay, so that's what I did then. But I'll tell you this: if you're new, if you're nervous, what I would do right now is just cash up. It's just cash up, and don't be buying anything heavy. Now, having said that, I did get a few more shares. All right, I'll tell you what I got a few more shares of. I got a few more shares of Apple because it keeps going down, and I just keep buying a few more shares, buying a few more shares, keep buying these dips. When this is all said and done and settled, Apple's a good company. They just had a wonderful quarter earnings report, and it's going down. You know why? The money has been taken out of the market. The money is in GameStop and AMC and KOSS. All of the money is pulled out. People are pulling money out of the market and then put it in those stocks. And then when those stocks, when they're done and they made their money, and some lose all their money, then the ones that just get in late, and then it's going to be a sharp drop off. It's going to be blood. Don't get it twisted. Then they're going to come back home to these stocks. So now what you need to be doing is buying the stocks at a discount. And so that's what I did. So I got some more Apple. I got some more CCIV, only a few more shares, but I got twice as many shares as the warrants, because the warrants, I see more upside on the CCIV warrants. On these SPACs, I make more money on the warrants than I do on the stock. And I don't wait until you have to exercise the warrants. I sell the warrants when I sell the stock. All right. That's one of Uncle Larry's plays that you guys watch it. You look at it, check it out. Okay. There's a company that I'm watching, and it's UWMC. UWMC. It's a wholesale mortgage company, and I wanted to get into mortgage financials. I played for some years ago. I made a lot of money in banks. I'm just not into banks right now, though there are some great banks out there. And I wanted to get into the mortgage company because they've been killing it. They have a report coming out February 4th. This coming February 4th. I didn't get any UWMC. I don't know why that's a tongue twister for me. I didn't buy any, but I got my eye on it for a dip. And when it dips, I'm gonna probably grab some of those. Okay. So those are the stock. That's what I'm doing. Remember, I'm not your financial advisor. You must first do your own research and then consult with your financial advisor, to which I am not. I'm Larry Jones, and this is Stock Up. We discuss stock. That's what we do here. But we make money, right, fam? So those are the things I want to say. This weekend, I want you to take your eyes and ears off of what's going on with Robinhood, GameStop, KOSS, and the whole short thing. Just take your focus off of that and start to look at the money, these undervalued. So we went from a whole market of overvalued stock. Now we got some undervalued stock, and then we got some staples that are going to make money. Tesla's going to be higher than what it is today. I don't care how high it is right now. It's going to be higher. And these companies are missing the bounce after these reports, just like Apple is. Apple is missing the bounce after the reports for two reasons. All the focus is on these shorts, and then the money is on these shorts, the AMCs and all of that. And so we have to understand eventually it's going to get cold outside and they're going to come home. And when they come home, I'm going to be like, I got a fire right here. You know what I'm saying? Because we're going to be making money. We're going to be making money. So we're going to move wisely. Okay. So what I wanted what I want to really talk about, and I'm going to end with this about you need more than a Webull, and you need more. And I'm actually going to open a Webull. I'm not downing Webull, and I'm going to start offering Webull to you guys as a stock, as a app rather. And Robinhood, that's up to you. I don't like what they did at all. And I know Webull participated in it also. But there's tools that you could use on there that I think you can have. So have multiple is what I'm saying. Have multiple apps. But I will tell you about Fidelity because I know I also have a TD Ameritrade. They participated in it. So I'm not going to push TD Ameritrade. anymore. I'm not going to talk about them. I really was just saying they were one of the bigger companies until they participated in this. So their hands a little dirty. And so if you got a Schwab, I'm not familiar with Schwab. I don't have a Schwab, but I have a Fidelity. So I'm going to talk about Fidelity and fractional shares for those of you that want to know. First of all, I didn't even say this, people. I need that like. That like keeps me out there so we can continue to make money. So hit that like button right now. Let's see it. Let's see it. Thank you. Okay. And for those of you that's new, go ahead and hit the subscribe button and the notification bell. All right. Make sure you hit the notification bell and make sure you have all checked, because sometimes I give you guys time sensitive information. So I want you to maximize your earning potential. Okay. So now let's go to Fidelity, right? First of all, I want you guys to open up a Fidelity account. If you don't know how to do that, look down in my description and I have a video that says beginner's course for investing, right? And I think the fourth video will just go over, it was actually the first video I made. Fam, I'm almost at 200,000 and we did this in 5 months because of you guys. Love you guys. But I think it's like the fourth video in. It shows you how to open up a Fidelity account, and just go ahead and open up the account. And what I like about the Fidelity is it allows you to have a Roth IRA, and then all of your windows are right there on the computer. I don't really like using it on the phone, but I do have it on my phone. But on the computer, it has my regular trading account. It has my Roth IRA, so I won't pay taxes on those. For those of you that's over 30, I won't pay taxes on that money. It's pre-tax. I won't pay tax on that money when I pull it out, as long as you leave it in there 5 years and you're at least 59. Okay, they allow you to put up to $7,000 in there. So all of these windows come up right there. I can see them all in one page. I can scroll up and down. But I also created another account called $5 a day, right? And so that's in there too. So right. So let's look. There is a tab. Your positions is here. This is my $5 a day. So I didn't put any money in it. So this is my $5 a day account. Now, normally all three of my accounts show up here: my regular trading account, my $5 a day account, and my Roth. So I see what's in every one of them, right? So what I want to show you guys is if I was going to buy, let's say Apple, I got mine in extended hours. If I was going to buy Apple, which is AAPL, right? And let's say I was going to buy one share, okay, of Apple, right? Now, here's what I want to show you. You see where it says switch to the new ticker for financial shares and trading. Click there. Now, here's what's really cool, good people. Now, I got extended hours, so I can trade up until 7 p.m. Chicago time. But all I got to do is hit buy. And instead of shares, now I hit dollars. And then I could buy $10 worth of Tesla. And I can buy it at a market price, or I could set a limit price. And then I hit preview and gone. So here, if you see here, it says view expanded ticker. So that just goes back to the regular one. Then just hit it again, and now you're on the fractional shares. So remember, buy shares. You could buy it by the shares, or you can buy it by the dollar amount, and then you can just put how much money you want to put in here. So if I want to put $100 worth in, now I'm in to Tesla. Okay, it could do everything that Robinhood does now. It don't have the candlesticks, but it has something called Active Trader Pro that is really good. It has a lot of good information about companies. It tells you, it gives you what's a strong buy, a neutral, or a sell. It gives you all of this stuff. All these tools are right here in Fidelity, and it helps me to become a better investor. Okay, so and you could trade pre-market and you can trade aftermarket. You can buy OTC stock. You could buy warrants. Okay, and you can pick up the phone and call somebody. And I am not paid by Fidelity. Fidelity doesn't do like Webull does, and I don't get any free stock. I'm just trying to help the family be smarter. I want to give you tools, right? And that's the whole problem that we're having with these hedge fund managers and these hedge funds is they have tools that we're not privy to. That's unfair, okay? So I want to help you guys be more savvy and smart investors. So what I want you to do, I'm going to end by saying this. I want you to first open up a Fidelity account and then fund it. And I'm going to tell you cash up. Don't look to buy any stock right now. And let's talk next week. But here's what we're going to start. What we're going to start is called the $5 cup of coffee. Okay? And it's going to be hashtag $1 million cup of coffee. That's the hashtag $1 million cup of coffee. I want to start this. And what we're going to do is we're going to pick 3 or 4 stock. And we're going to set this automatic. So we're going to set your transfers from your bank account to Fidelity on automatic, $5 a day, $5 a day, right? And it's going to do that automatically while you're at work. We always say pay yourself first, but guess what? 95% of Americans, we don't, right? And for those of us that go to church and we like to pay tithes, we pay tithes. We give God his money first and we don't pay ourselves. Let's face it, you don't pay yourself. But why not set it on automatic? So pay yourself first and then have your money make money. So we're going to set it on automatic, and we going to, after all of this badness this is over, I'm going to share with you my challenge and what stock we're going to pick. It's going to be my $5 a day challenge, right? Hashtag $1 million cup of coffee. And we're going to see what type of percentage we can make. Now, in my example, I used a number 35%, right? And I know some of you guys, you can't make that in one stock every year. I know. That's why we're going to pick and choose. It's going to be actively managed, right? So we might make 20%. We might make 40%. We don't know. But what we're going to do is we're going to try. I can guarantee you this. You're going to make money, and you're going to make good money. And then what you're going to see is if you could do this continually, you are literally on your way to becoming a millionaire. So I want you guys to participate in the challenge. Okay. So I want you to do that. And I want you to watch this video. All right. I want you to watch this video, this $1 million cup of coffee. Everybody needs to see this video, and it's more important now than ever. And then I'm going to let you know when we're going to start the challenge. Okay. All right, good people. Hope this helped you out. Again, if you haven't subscribed, go ahead and subscribe. But hit the like button, subscribe, notification bell. Leave me some comments what you think about the $5 a day hashtag $1 million cup of coffee idea. Are you going to roll with me? And let's make some money. All right. Watch this video. Live, love, laugh, and learn. Peace.